Welcome to Guardian Capital's market outlook discussion for the month February 2026. For the agenda, we will be discussing four things. First, education, thinking framework. Second, earnings. How has the earnings been for the BSE 500 companies in the previous quarter? Third, valuations and expectations. What are the valuations of BSE 500 and other indexes, and what are the expectations going forward? Fourth, sectoral view. Our first principle is that over a long period, earnings growth determines 80% of the returns. In this slide, we want you to focus on the two red circles, which indicates that over the 3 decades, price has been growing at 11% per annum CAGR, whereas earnings have been growing at 10% per annum CAGR, which means that there is a direct correlation between earnings growth and price growth. Principle 2 says that revaluation growth determines 20% of return. Say in the last 11 years, Asian Paints have gone up by 13%, out of which 10% was due to earnings growth and the balance was due to revaluation. Revaluation means people were willing to pay 43 rupees for every 1 rupee earned by Asian Paints, but now they are willing to pay 61 rupees, which accounts as revaluation growth. In this slide, we want to highlight the importance of extra 1% of return generated. If we invest 1 crore today for 30 years and assuming a return of 11%, we would end up with 23 crores after 30 years. However, if we just generate 1% more, we would end up with 30 crores. And 3% more return, we would end up with more than double of 23 crores. This is the power of compounding and signifies the importance of staying invested for a longer period of time. Moving on to the second aspect of agenda, the earnings slide. If you look at the table, across all market caps, the revenue growth for the quarter has slowed down and is growing slower than its historical average growth rate. However, on margin fronts, margins are quite strong, primarily because of reduction in interest rate and the deleveraging of balance sheet, helping the company increase the profitability. Moving on to the third segment of the agenda, valuations and expectations, how the markets are currently valued, and what should our expectations be going forward. Valuations front, barring small cap, all the other indexes are overvalued, particularly mid cap, which is overvalued by 23%, followed by BSE 500 and large cap, which is overvalued by 17%, and banking finance, which is also overvalued by 17%. Historically, companies have grown by 11%. The growth has been slowing down for 8 quarters now, with the latest quarter revenue growing by just 7%. So, because of the revenue growth has been slow and the valuations have also gone down with the markets correcting, in this scenario, it would be ideal to wait and watch in the market. Moving on to the final aspect of the agenda, sectorial view. Currently, only 38% of the economy is overvalued, while 62% of the economy is fairly valued. If you look at the revenue growth rate front, 22% of the economy is growing at a faster rate than its historical growth, while 78% of the economy is growing at a slower pace than its historical growth. Talking about the opportunities, we currently see opportunity in 3% of the economy, which comprises of two sectors, which is FMCG and consumer durables. Investments in the security markets are subject to market risk. Read all the related documents carefully before investing.